Between a Cursor fundraise and a Windsurf acquisition, big money news in the world of vibe coding. Welcome back to the AI Daily Brief Headlines Edition, all the daily AI news you need in around 5 minutes. According to Bloomberg sources, an agreement has been reached for OpenAI to buy Windsurf for about $3 billion. Now, this is a story we've been following for a while. Last month, it was reported that OpenAI was looking to acquire a coding agent platform. They had apparently tried to buy Cursor a bunch of times before settling on Windsurf instead. While Bloomberg said that the deal is not formally closed, sourcing was clear that an agreement had been reached. Windsurf's latest valuation from their last round back in August was $1.25 billion, and they had apparently been in talks with Kleiner Perkins and General Catalyst to raise a new round of funding at a $3 billion valuation. Assuming this goes through, it will be OpenAI's largest acquisition to date, and shows, if nothing else, the significance of coding as a use case for AI. The company has, of course, been working on their own coding assistant, releasing an open source version last month. However, it's also seemed like they have their sights set on something much bigger, with reporting indicating that they wanted to launch a fully automated coding agent that can justify a significant price point in the tens of thousands per month in the future. Now, online there is lots of speculation around why OpenAI would make this move. Some think it's about Windsurf's rapidly growing 600,000 monthly active users. Daily.dev CEO Nimrod Kramer writes, OpenAI buying Windsurf isn't about IDEs and definitely not about AI. It's about owning the developer. Windsurf figured out something most AI infra companies haven't. Distribution beats anything. They built a dev-facing product that's actually used across 1,000 companies and millions of engineers. That makes them valuable not because of their tech, but because of attention. In 2025, that's the new currency. This move fits a bigger pattern we're seeing. Foundational AI companies racing to capture the last mile. They've realized that whoever owns the developer's workflow owns the future of software. For devs, this means two things. 1, expect the tools you use to be increasingly shaped by whoever owns the underlying model. 2, expect fewer choices, not more, especially when products consolidate under one provider. That's the bet OpenAI is making. They didn't just acquire a product, they acquired a distribution channel, a data flywheel, and a wedge into dev teams who've been leaning towards Claude or Cursor. Now, speaking of that, the other big line of conversation is people thinking that the battle between Cursor and Windsurf looks a lot different if, because of this acquisition, Windsurf users only have access to OpenAI's models. Developer Nick Dobos writes, Cursor versus Windsurf becomes a much different conversation if Windsurf can't use Claude or Gemini. NearSD writes, I don't get it. Doesn't this kill Windsurf? Cursor's biggest USP is that you can switch to the latest, greatest model. Now, it's not a guarantee that that's how OpenAI is going to play this, especially given that we've seen them make moves recently that suggest they're willing to play ball with where the community is, specifically in supporting MCP. Still, given that we haven't even gotten a confirmed deal, details will have to wait just a little bit. Speaking of Cursor, however, Anysphere, the company behind Cursor, have reportedly raised $900 million at a $9 billion valuation, led by Thrive Capital with participation from Andreessen Horowitz and Accel. This is a jump from their last round of funding, which came in January at a $2.5 billion valuation. Now, it certainly seems like capital requirements have increased. The previous round only raised $105 million, marking a huge jump up this time. At this point, Anysphere is one of the fastest growing software companies in history. The Financial Times reports the startup grew annual recurring revenue to $200 million in April, with numerous others suggesting that that number is already up to $300 million. Last time we checked in on well-sourced figures, ARR was running at a $48 million pace in October. Coding assistants were already one of the big winners in AI venture, but this round cements that the numbers are there to back up the hype. Lastly today, staying on market and investment themes, Goldman Sachs says to buy the dip on AI stocks. The DeepSeek jitters are gone and fear of infrastructure overbuilding are melting away as investment bank analysts look to the dip in big tech as a buying opportunity. A recent research note stated, it's fair to say there's a lot of pessimism in this theme. We consider this an opportunity to buy the dip. As for some justification, big tech recently completed their earnings cycle with each company reporting strong growth in their AI-related business lines. Microsoft did confirm that they're pulling back slightly on data center spending, but clarified that this is more about preparing for a glut in a few years' time than it is about the current conditions. Everyone else is doubling down on CapEx even as tariffs increase the cost of construction. Goldman Sachs analysts wrote, all AI themes are cheaper than they were at the beginning of this year as well as last year. Looking at long-term earnings growth, the different baskets look cheaper to previous AI years, closer to pre-ChatGPT levels. Looking at our broad AI basket's performance relative to its earnings, the group continues to be cheap while earnings prove to be steady. Compare this to the bank's analysis from around a year ago when they published a report titled Gen AI, Too Much Spend, Too Little Benefit. I spent the whole summer swatting that one down. Might I be able to actually focus on the technology this summer instead? We'll have to wait and see, but for now, that is going to do it for today's AI Daily Brief Headlines edition. Next up, the main episode.